Brendan, welcome back to part 2 of the Buyer mini-series. Welcome back to your own podcast.
Well, thank you for having me.
Here at the Word World headquarters in East Boston, Massachusetts. And
also available for rent for other podcasters
yes,
if you want to have.
on Pure Space. Just kidding. We had it on there, but no one wants it. But anywho, we talked a lot about preparing to buy and finding your agent last time, right? So
very important steps.
We did also touch on getting your finances in order. We talked a little bit about credit, a little bit about down payment, and how some people try and save a ton of money, and that's a mistake potentially because you can buy with as low as 3 to 3.5% down. And I don't think we talked about choosing your closing team, i.e. the attorney, your lender. Usually the realtor, once you choose that person, hopefully has a network of great people. And I think just a point that I would like to make that I think obviously you and I execute on at a high level, I think is making sure that the team that, I think people put a lot of trust in the realtor, right? So if you think about the process of hiring a realtor, which we talked about a couple weeks ago, whereas most people just like go with the first person who looks like they're okay in the neighborhood that they're working in, right? So I met you at an open house. This person has a pulse. They were kind of nice. Could you please help me, right? Versus actually interviewing multiple realtors. So if you've taken any cold body as a realtor, then maybe they don't have recommendations or their team is not a great reference. However, if you are working with a professional agent, more than likely they have a ton of good options for you. And what I was going to say is I think something we execute at a high level is truly us as realtors, you guys as the legal team, and any number of our partner lenders, whether it's Anthony over at NRL, Sean and his team at Guaranteed Rate, Jason Deeb at Cambridge Savings, right? The Ferrara gals, right? Whoever it is, I think we all really work in towards the same direction, and we're always aligned. If there's ever a question, we're checking with one another, and I think that is a real valuable thing that we've all been on the transactions that
where it doesn't happen,
right? And the lenders going rogue, causing a lot of anxiety, asking repetitive questions that have already been answered,
throwing people under the bus in front of the clients, doing all sorts of different things that
we were just talking about offline.
Yep.
And then there's also the attorneys that I think go dark and only communicate with their client and cut the realtor out. And then that usually spars questions from the client to the realtor, and they're out of the loop. That's a bad look, right? So the reality is you want to work with a team that executes at a high level and usually is aligned. And so the question that I always like to ask my clients is, hey, do you have a real estate attorney that you've worked with before? Now, because here's the deal. If you say, hey, do you have an attorney? Like
everybody's got several.
Yeah, it's like everyone knows an attorney. Yeah. They could be a litigator, doing accident law. I have no idea.
Yeah, or they could run the court clinic on, animal rights.
Right. Probably not the person you want representing yourself in a real estate transaction, which happens it's very time sensitive.
Yeah.
Right. So something, and we'll hop around a lot today, but we did want to talk about selecting that.
Yeah.
And then something else we have on the agenda is like, well, I think we can kind of lightly touch on the offer process, right? And I think we should talk about
maybe have accepted. A lively debate on concepts of the offers.
Concepts, yeah, we should do that. And then we'll talk a little bit about once your offer is accepted, what's happening next. And I think honestly that'll probably close the series out for part 2, and then we'll finish kind of closing day and beyond, right? So, I completely lost my train of thought, but what I was going to say is, I don't think we need to talk too much about actually going to find the house. That's kind of the fun and easy.
And we talked about the neighborhoods and identifying that stuff last week, which helps guide the realtor and the team on finding the right place.
Right.
But I think you also touched on in your intakes, you go over what are the things that you must have. Yeah. Is it a pool? Is it a formal living room? Is it a formal dining room? All that sort of stuff.
Right. Yeah. So
that's why they hire guys like you, because you're really good at helping people find what they're looking for.
I appreciate that. Yeah. Right. So So there's this concept, which I think is important when you're specifically talking with your legal team in a real estate deal, that is called time is of the essence, which is such an ambiguous phrase.
Well, it's a phrase of art. It's a legal term,
isn't it? So,
it is.
And so back to the picking your attorney specifically, something I obviously appreciate working with you and your team at Cherry Tree Legal and title is just the responsiveness, right? So there's PNSs due today, there's closings coming up around the corner, and all of this communication happens in like fire hose moments, right? It's like a lot, and then there's nothing, and then there's a lot, and there's nothing, and you're either in contract or you're out of contract, and I think that's also sort of art, and it shouldn't be, you know, but nonetheless, I think, you know, that's why that question is like, hey, who's your real estate attorney that you've worked with before? Loaded question, a little salesy, because sometimes they're a first-time home buyer or seller and they haven't worked with somebody. And I also think that it's interesting to me that most clients that we help sell do not remember or have any recollection of who that real estate attorney was, which I find interesting and probably a unique business opportunity for a lot of attorneys in the business out there. But the point being is, you know, if you're the animal rights activist and you're doing whatever you're doing in the court clerk, you know, that I don't know, whatever the hell you said.
Yeah.
You know, like you can't get to the email at 12:32 on a Tuesday.
You probably don't even have, you know, templates. You probably don't even have, you know, understandings of the intricacies of lead paint laws and urea formaldehyde disclosures and, you know, all the stuff that like is outside of the norm for a non-real estate conveyancing attorney, right? So like, plus you certainly can't help a buyer because you don't have a title agency,
also
right?
true.
So you could do a seller rep,
right?
But you're probably not going to do it effectively.
So these attorneys that kind of act as if they're real estate attorneys. So how do they get title insurance policies?
So they either partner with someone like us where we give them a piece of the title. We do all the back end work.
That's pretty common.
It's not that common.
No, really?
No,
okay.
I don't know. I would say in the last 12 months, I can only think of one transaction very recently where like that popped up.
How much do you think of that as just the shift in the industry where there was a plethora of business, and I think now as like the craft has been a little bit more honed in a unique market, some of the part-time or the dabblers have gotten more focused on their niche?
I definitely think there's a lot of that. I think there's a lot of, I think post-pandemic, I think a lot of people that were hanging in there from an age perspective are maybe double thinking going back to work full time, right? So they someone that had a thriving conveyancing practice and one that was in their mid to late, mid 70s, like maybe they're not coming back from the COVID era.
Right.
There's also title insurance companies, right? So when you do a lot of conveyancing, we're all agents of other insurance companies that issue the title insurance, and you have to write a certain amount to keep your agency, right? So like it has to be profitable for the title insurance company to have us on as agents. So we have 4 or 5 companies that we write with, and we have to write certain like we have thresholds that we have to meet with each of those. So and they'll come in and shut you down. So there's some of that happening too. Is if your work dried up, and then as the loan officers leave and realtors leave, if those were your relationships and they left and now you don't have any business.
Yeah, it could be tough.
Yeah.
Right,
So the same attrition that's happening in both mortgage and real estate, I think, is happening to some extent in the title world.
Right. Yeah, I always got the feeling that there's like people that went to do a certain type of law and then found their way in this business. Yeah. Whether that be through networking or, the speed of it or whatever. So, So anywho, I think that's a really important question, and I usually push back on clients when they're like, "Oh, my uncle Billy used to do it." Like, this isn't a used to do it type thing. Like, we're dealing with the biggest financial decisions. So, I guess the call to action to clients out there is, listen, we're not trying to convince you to go in a different direction. We're just trying to make sure that we're all in the boat rowing in the same direction with the same cadence.
Yeah.
Because ideally we're going to get there safely without capsizing, drowning, or fighting each other, right?
And I think
probably
it's a change in
an
the
ill-timed reference for
the rowing,
the boat stuff.
Why?
Or you're not paying attention to the submarine stuff?
It's a submersible, first of all. It's not a submarine. It's a submersible. I don't fully understand the difference.
Are we going to do this right now?
No, but whatever.
Rest in peace.
Well, you know, buyer beware. Like, you knew you were going in a piece of shit under the sea. So
with no comm that you're bolted in.
Right, and only one person in the entire submersible could extend their legs, and there's a towel curtain over the toilet.
Is that serious?
Yeah, I'm good. I'm real good.
Sounds like a bad few days.
Yeah, if I'm paying $200,000 to go on a boat trip, it is going to be better accommodations than that. But we digress. So one of the things that is super important that I think you touched on is the team, right? So having this team working together.
Agreed.
And, you know, nothing is more frustrating when you are part of a team and the team you're playing just isn't showing up for the game. Right. So what we notice in this business is if, you know, we've got a tight turnaround time for PNS and we've got, you know, all these things that got our offer accepted. Right. And then the seller goes off and they choose their uncle who's 80 and doesn't talk to realtors and, you know, all the things that break down the process. You know, we turn around the PNS, you know, within hours of getting the offer.
Right.
And it just sits. And then we send emails and we make phone calls and we follow up.
And sometimes the changes are phoned in.
Left on the voicemail. That's always one of my favorites. I love it when I get a fax with handwritten edits. That's always awesome.
I just like when faxes make a semi-annual reemergence into the business.
They do.
Which is something else. So, you know, listen, buyers out there, I think, you know, buyer beware again. Like, just do your due diligence. I think that's the moral of the story. They're trust but verify. Pretty important.
And trust your agent. You hired them for a reason, and if they recommend somebody, chances are
they're pretty good.
They're pretty good.
Yeah, I think that's trust your agent, but trust but verify, right? Because if you're the buyer who found your agent in the driveway from a click through where you thought they were the listing agent and they're the part-time agent who might not have those connections or they might not be available themselves or they've never done a deal.
Yeah.
I think that's where the blind trust can lead you awry. So
but our listeners wouldn't fall for that because they've already heard episode 1 where we go through the extensive list of questions you want to ask your agent, and those are some of the first ones that come out.
Yeah, and listen, you know it's funny. I got a handful of DMs from some angry realtors out there from some of the comments that I made. Listen, I'm not I'm not ripping Zillow.
Yeah,
and I'm truthfully not ripping the part-time agent. Right, what I'm ripping is the person who only gets their business from Zillow, and I think you are a attempted paid assassin, and that whole relationship starts awkwardly is my point. And because the consumer wants to get in the door and maybe they're already working with an agent and their other agent was non-responsive. I can't control these things, right? I'm just saying that sometimes those relationships start on weird terms. Sometimes it's a complete positive intent. I want to go see this piece of property.
Well, especially if they're a good agent, right? Like we had those great guys from Southern Jersey.
That's right.
That built their practice.
Yeah. Big Zillow Flex team.
Yeah.
And listen, there's nothing wrong with that, but you know, it's not 100% of their business. And I think what's important is, and I mentioned this last time we talked about this, like they truly do, and most big teams that are in Zillow Flex locally do the same thing. They have a driveway consult. That's what they call it, where they're literally attempting to find out some of these key things about the buyer in the moment, and they are successfully getting them into their process. And they do hundreds of deals a year. Different story than the part-timer or wing-it agent who is working or not potentially providing the right advice. And so for the buyer out there, do some due diligence on the agent, cross-check a few different platforms other than Zillow, and talk to a few different people. And when you take their recommendation, ask for multiple, right? And like, hey, talk to this person, and you know, then it's on to the attorney or the lender to just like the agent had to do, sell them.
Yep.
On why they should be the person to
but
work jointly.
Make sure that you're hearing a process.
100%.
Make sure that you're hearing, you know, questions about what it is you're looking for, right? Like all of those become important. If you start talking to somebody and there's no really developed process about how things go.
Just use whoever you want. It's
Right.
fine with me. Like, this is someone who doesn't have an opinion, which means more than likely
they need your business.
Yeah, and
and
they're not
afraid to give you their opinion.
Yeah, and they might not be as practiced as they let on, right? So I think that's the point, right? So again, full disclosure, when I say part-time agent, there's nothing wrong with the agent out there who's hustling 30, 40, 50 hours a week as a second job.
Yep.
What I'm talking about is the agent who I get a call from on Tuesday because maybe their brother waddled through my open house on a Sunday, and they're too busy to come see it for themselves because they're at work. That's who I'm talking about.
Or they were at the beach.
Yeah. You know, so I can tell you right now that transaction at Peabody, like I had to excuse myself from my own open house to run over to see that house to make sure the other realtor knew I was there because I knew it was going to be a competitive scenario. I wanted the realtor to know that I was there. I could properly guide my client, and I all but guarantee you, not being the highest offer with a VA buyer, that is the difference maker. And so, again, I'll get off this tangent here. Just do your due diligence, buyer, interview multiple, take the recommendation with a grain of salt. And just validate, trust but validate, right? So trust but verify, whatever you want to call it. So,
and then but it's good. So we started that discussion on the need for a team, right? And then the team being able to work together is incredibly important. Yeah. And then when it, you know, certainly when it comes to the lender, right? So a big piece of this is going to be how do we buy it and how do we pay for that? And going to the lender and doing, you know, getting the list from you and talking to the lenders, like there are things that are important as a buyer. You know, I think a lot of buyers think that price or rate is like the really only thing that matters. And I would beg to differ.
It's almost always the sticking shopping point, which I can see be very frustrating, right? It would be like anyone never would talk to you until you disclose your legal fee. Yeah. You know, which is, don't get me wrong, I'm sure a small percentage of people require. Yeah. And guess what? Sometimes
it's always the same, so it doesn't matter. Like I have no problem talking about it, right?
I was just gonna say sometimes like that person who is so what's the word? Like so stuck on what's it gonna cost? What's it gonna cost?
They're probably not a good fit for our team model, right? Like if you're that bent on getting the lowest price option, this team and knowing all the other players that are a part of this group, we're probably not the right people for you.
Not the cheapest,
right?
Yeah, we're trying to pay for a next level of service, right? So
exactly,
that's the point I was going to make. You know, so but I agree with you. I think unfortunately the lender gets huge. It's a huge pain point of them specifically when then it's like, well, just tell me what the rate might be, and then so. Let's dive into that a little bit. What in your opinion? What really differentiates lender to lender, knowing that most of them are selling the same product?
I think the biggest thing is their ability to close a loan on time and to do it effortlessly and seamlessly to the buyer. Right? Like,
well said.
If I was a consumer, knowing what I know now, I would pay extra to guarantee that I'm going to get closed on time, that I'm going to not get the same question a million times looking for the same bank statement, right? I don't have enough time to print out bank statements 27 times and email them to the same person that I've already sent them to. And to have an unorganized team, right? I think that kind of like you and kind of like we've invested a lot of money in building teams and building, you know, people to do these and creating processes. And what I was getting to sort of earlier is like when you're talking to these people, find out what the process is, find out who the team members are. So when we had Shant on, he did a great job of talking about his concept of building his team, right? So what he was adamant about, and I think you and I sort of fall into this category too, is that people are communicated with. It doesn't matter if it's from you or I as the leaders of these teams. It just needs to be somebody updating people on what's going on. And I think that if you request the same documents over and over again as a borrower, and nobody knows why, and people aren't reaching out to you to go over where we are. Like it's not worth the low rate. You get what you pay for.
Yeah, I agree with you. I think you said it well in the first sentence. On time and kind of effortlessly is really important because, in my opinion, and this is less so about our group that we kind of like to point people towards. It's everyone in this industry seems to work in chunks, right? So like very heavy work up front or very heavy work at the end. And when you're very heavy trying to get things done at the end, at the 11th hour,
it's a nightmare.
It is an absolute nightmare. Knowing that most people are selling to buy, or obviously they're moving somewhere. So when there's multiple people on these transactions, especially multiple professionals, and you're the person who is dropping the ball, and again, not one of our elite lenders here, like it's super frustrating because almost always I feel like the client's out of the loop, and at some point, very rarely in my experience, is the lender picking up the phone and saying, "Hey, Brendan, bad news. We need to ask for a little bit more time on this deadline." You know, it's almost always shoved to your corner or my corner.
Yep.
In the 11th hour.
And then we have to go to the client and say, "Is this okay?"
Right.
Right.
And we're the ones catching flack for it, right? So, like there's some lenders that we work with that are just absolute machines.
Absolute.
Stuff is clear to close weeks early.
I'd pay extra for that. What I know now and how a transaction flows, I would certainly, like, that is more important than, an eighth of a point on the rate.
Yeah.
Because they're going to come down anyway, so you're going to refi at some point.
Right. Yeah. I just want it to be, seamless. And to your point, there is a lot of paperwork involved, especially as self-employed individuals, right?
Absolutely.
More so than the W-2 person.
And a lot of review.
Yes. And so someone who's going to work with me and communicate, this is going to sound, communicate effectively with me, kind of also in, I'm going to use the word chunks again, like, hey, I need all this stuff.
Yep.
Don't come back with 38 one-off document requests.
Send them all at once.
Yes. Come with one specific pre-written, and like you've been in and out of underwriting. Underwriting, if you don't know what I'm talking about, is when the underlings, so to speak, of the bank audit the file and come back with different levels of conditions and say, hey, you need to do this, you need to do this, and then we'll move it along the process.
I take exception to the word underling.
Well, whoever it is.
They drive a lot of decisions at the banks. They are definitely not underlings.
We call them an overling.
Yeah, there are overlings, yeah.
Okay. As an underwriter, it should be called overwriter.
It should be.
So we'll just call them a processor.
Yeah.
It's someone who is auditing and issuing different levels of conditions that you need to execute on to move the loan forward.
Yeah, they're reviewing your finances to make sure the bank will be protected in lending to you. So they are ultimately,
that was much better said.
Yeah, they're ultimately making the lending decision, and they have checklists like everybody else.
Checks and balances.
Yeah, and they have to make sure that you qualify.
100%.
And it's not an easy job, I would assume, for the underwriters. But if you can get that sort of one concise list of what's needed or what's outstanding, it's so much easier. What is the worst is when you're on a transaction and it's coming because you know who the people are, and you're like, they're going to call on the mortgage commitment date. They're going to ask for 27 extensions. We're going to have to change closing. People in the industry get reputations. When was the last time you saw anybody accept pre-approval on an offer? No, I was going to say Bank of America.
Oh, yeah.
Right?
So we even just had a client right now who's like, and listen, I understand. Like, I personally bank at Bank of America.
So do I.
It's a great banking platform. I love how easy online bill pay and the wires are. At the end of the day, any larger bank, the underwriting process is super slow. And I'm sure that they're big enough to do it, quote unquote, in-house. But like they're on a different timeline, man.
They're on a different planet.
Like, and listen, I don't want to make this about Bank of America specifically. I've had dozens of small, local and countrywide banks who disrespect is the only way to put it.
Yeah.
The timeline.
Yeah.
Time is of the essence.
Correct.
Not to them.
Nope.
And so, we've had the markets heated up a lot. And so when you're talking about, hey, I'm comfortable guiding you through what would win. And sometimes what will win is no contingency offers, but they're still getting financing. And so when you want to go ahead and then pivot to a company like that has a reputation of never closing in a timely manner, or just quite frankly not responding in a timely manner, we're always going to push you off that. And it's nothing against my guy or gal and them making money. It's about protecting your deposit.
Correct.
And I feel
You're
like
stealing the words out of my mouth. That's literally what I tell people. My job is to protect your deposit. And you can't let me, you take away all my ability to do that when you go with someone that we already know is going to be unable to perform on the day of performance.
Yeah, and listen, that might be harsh, right? Yeah. But in theory, if I'm not risking $1,000, let alone $30,000, $40,000, $50,000, $60,000 in hard deposits on these deals, when you want to pivot to a lender that I haven't literally ever closed a deal on time with, albeit probably not enough a sample size.
Yeah.
But the way I look at this business is every single one of these times we do a deal, we're interviewing with somebody. Yeah. We're interviewing with the seller. We're interviewing with the other realtor. And listen, I know agents out there, I can get a little hot under the collar. My public apology. Yeah. But it's only when I'm pushed. It's when I'm pushed with some irresponsible question, a second or
unrealistic demands.
Yeah, it's just a second or third attempt of trying to do something that was just available publicly. It's a date on a product. It's a last minute request because you were too busy. I don't know what it is. That's what I get. That's when I get pissy because it puts my client in a weird position, right? So my apologies out there. But these are some moments too where I just it's not about Joe Schmo the lender making an extra buck.
No, and you should talk to all the lenders you want, but the questions you should ask are: what is your process like? When do you do your full underwriting? How long does your typical underwriting process take? My offer is this time frame. Do you think you can have a clear to close in that sort of time? Those are the questions that are more important than the rate.
And just know, again, if you're taking the guidance of the team, we're putting you as one of those people that has delivered on a track record.
Correct.
So maybe less important.
Yeah.
If you're going to go out on your own and start interviewing your own people, which, listen, it's your right. Go ahead and do it. It's all good. We're happy to give you, if you want 3 recommendations, I'm happy to give you. If you want 10, I can give you 10. And maybe that's when you start kind of comparing and contrasting.
Yeah.
Usually sticking with the go-tos, you're going to get all those things delivered on. Yeah. And I think there was a transaction in the last couple of years where someone tried to pivot lending. Luckily, it was pre-offer. And I was like, listen, I know we were talking about a clean offer. If you want to go that way, you can. I'm literally not writing. I'm not signing.
Waiving a mortgage commitment.
Yeah, I'm not going to do it because I'm putting you in harm's way. And you can literally fire me.
Yeah.
And they were just like, are you serious? And I was like, yes. And they're like, we'll just go with your lender.
Yeah.
And I think that
and
was
it's
enough.
not because you wanted your lender to get the
That's what I'm saying. I'm trying to be
money.
clear about it.
Right.
Yeah.
It's because it was a disservice to the client.
And I feel like, unfortunately, that's what's always on my mind for the client.
Yeah.
They think I'm just trying to hook up my buddy or something like that.
I mean, we do enough business that our buddies are going to get hooked up one way or another, right?
True.
Ultimately, at the end of the day, we are bound. We are both licensed. We both have ethical responsibilities. And the only person that we have duties to are our clients, right? So, as much as we may like any of the people we work with,
which we like you all.
Yeah. Our licenses are tied to doing a good job for our client and protecting our clients in the ways that our individual licenses require us to.
Yeah. So we just spent a lot of time on that. And so, no, we're not messing with you so our friend can make a buck. No. These are the people we've seen time and time again perform and, quite frankly, exceed the timeline required and the expectation.
Can we spend a second and talk about why we think this is important?
Yes. Please.
So in an offer that you have had accepted where you waive your mortgage commitment, right? So meaning you don't have an out if your mortgage doesn't close. Additionally, there's no language in that P&S that allows for anything to extend the date of performance if your financing isn't ready, right? So we get worried.
Just quick question. TRID also waived in that?
Always.
It is, right?
Anybody who was representing a seller always takes it out. I always put it in, right? Like PNS is a game of tennis, right? Like you put in what you want. The other side usually takes out some. They leave some, right? So we always ask for it. But most sellers say, you waived your commitment. You're not, we're not going to do it. And what TRID is, for those that don't know,
thank you,
is the truth in lending laws that require that a CD or a closing disclosure be disclosed to a buyer 3 business days before the closing. And if it's not, the closing can't happen. So then it has to get reissued, and you have a certain period of time that you can do that. Well, guess what? If you don't have that language in there and your lender is not ready, and the buyer and the seller isn't relatively accommodating, you could lose your deposit.
Right.
Because you are not ready to perform on the day of performance. And we don't have any tools in our toolbox left to protect that deposit. That's why we get nervous about it.
Thank you for the explanation. I actually just wrote that down. Like, we should explain what that is.
Yeah.
And so let's go off on a tangent real quick. Let's say
those are my favorite.
Let's say you're in that scenario where you're representing a seller, and the buyer has the waived it all. And we run into this. Hey, there was an issue. We had to change the loan at the last minute, and we had to reissue the CD. Right, so it restarts TRID.
Yeah.
Right. So just for everyone out there, there always can be credits at closing, but the bank amount is what triggers this CD, what's actually being lended. And so, you can still, if there's a final walkthrough issue or something happens and you have to renegotiate at the last minute, there can always be a credit, and usually that's out of the cash to close option. The bank number, my understanding, can't change. You're gonna try and fact check me on this.
The bank number, the loan amount can't change.
That's what I'm saying.
Yeah.
So I'm putting.
But some banks also require us to approve a seller CD.
Oh, interesting.
Right. So like if the seller's going to give a credit, or the seller's paying something off, we can't just nilly-willy add stuff to a seller CD either without the bank approving it.
Okay. So what I was getting at is say something happens in the last minute.
Yeah.
And we have to re-trigger TRID.
Yeah.
So there's this other 3-day ancillary holding period, and the closing gets moved a day or two. What's the chances that this is this other concept of offers acting in good faith? Like, what's the chances you're extending that versus trying to, at the end of the day, everyone wants to get to the transaction, right? So I don't think, unless there's a daisy chain scenario that potentially results in damages to the seller, would you say more than likely off the record that we're trying to just figure this out?
Always my advice to figure it out, right? The alternatives are never great. So at that point, there's real money on the line, right? So you say you default the buyer, which means you say they can't perform. You say under the contract you signed, under paragraph, 12 or 13 or 17 is the liquidated damages to the buyer, which says that if you can't, to the seller, you can't, the buyer, seller's liquidated damages. Yeah. You can't perform. They get to keep your deposit. Well, guess what? When that really happens, they're gonna sue you. You can't move to somebody else. I mean, maybe they're not. You'd win, but it slows everything down. Plus, if you don't wait the couple days, you got to go back to market, depending on.
Are you going to get as much money?
The conditions, like most people.
Right thing to do is play nice in the sandbox.
Yeah, most people will extend. But
seems so weird with
as a lawyer,
it's breach.
I can't guarantee that they will do that. Like they are well within their rights to keep your money and say no. Right. So like I can't say, don't worry about it. Yeah. Like 90% of the time it doesn't work. Well, with my luck, you'd be the 10% that doesn't work, and then you'd sue me.
And here's the deal: we're talking about something kind of in good faith.
Yeah.
We're not talking about the offer that's waived at all, and you need a 2-week time extension because B of A couldn't deliver in their bogus underwriting phase. Right now, we're really starting to potentially ask for too much.
Yeah.
Which we weren't entitled to. And I think that's a different scenario. And listen, I know for
those are the ones that I'm more worried about. I think you can usually get to a reasonable accommodation.
Good faith.
Yeah, when you have normal teams on the other side.
Yeah, I agree. I agree with you. Very interesting. So, yeah, I think that's why, again, for the listeners, I know we're going like it was super into the weeds here. Yeah. The reality is that lending team being in lockstep with the rest. Make sure early we can be on top of stuff. We can proactively manage expectations instead of the client who's packed up their whole house and then we have to punt things for God knows how long because the
underwriter picked the file up 2 days before closing and is like, oh, I missed this. Sorry, can't close.
I completely agree. So
right, which is much rather why when you're interviewing these people, you want to talk about the process.
Sure.
When do they do their underwriting?
Right.
You want someone that does it closer to the application.
Earlier.
Right.
100%.
Yeah.
And that's the best part I think about some of these lenders that we refer, which we'll put all in the show notes. Like, they do this all the time. They do it full time. They do it early.
And they're all really, really good.
No doubt.
Yeah.
So if you're looking to get pre-approved, check the show notes. We'll have our preferred vendor list in there. Okay, so you're pre-approved. You got your attorney. You get your realtor. Let's skip the home shopping activity.
Yeah, we'll get right to the offer.
We're writing it. We're writing, as we call it in the biz. So,
okay.
This will be a little tough to do from an audio version, but I think there's a couple real big components of any offer to purchase.
Yeah, pretend I'm your buyer, Seth. Like, what are you telling? We found the house we love.
Yeah.
We're ready to make an offer.
Yeah.
How are you walking me through that?
So, the offer document. So, transparently, what I usually do is create a loom.
Oh.
Right. So I'll do.
I like looms.
Yeah. So a loom, if you don't know, is free screen recording software. Sometimes limits you to 5 minutes. We have the paid version, so we can go unlimited. And what's really nice is you can share your screen. It puts you on camera. And so a lot of the times for clients in the first-time offer, first-time home buyer, if they're not familiar with the document, and if we didn't cover it in onboarding already, we'll create a loom, and I'll walk them through what a mock offer would look like on this property. And I think it hits different, and they learn better because they're in the hunt in the moment, right? So 1 or 2 page document, really elementary. The top of it is the property info, the agent info, all that type of stuff. We're going to fill that out. Don't worry about it. As long as make sure your name is spelled correctly. And here's the deal. Even if it's not, or you get the wrong, maiden name, your maiden name's on there instead of your legal name, we can always fix that stuff as part of the next contract. But in a perfect world, it should be
correct. Should be the name as it appears on your driver's license.
Yes. Thank you for the legal answer.
Well, it helps when the offer, so knowing where the offer is going from here too, it helps to have it right the first time.
Yeah.
Because it makes everybody else not look like a moron down the road.
Yes.
Right. So oftentimes the offer will have someone's name wrong, or not everybody. Then we just go along with what we've been given when we're doing a purchase and sales agreement. Then it gets sent to the buyer or the seller, and they think we're incompetent because we can't spell their name. Yet we've never seen any documentation with what their name is or how it's spelled.
I'm writing you a note right now about a transaction.
Oh, always. Yeah, probably. Always.
I just
we pull the deed on the for the seller, so I'm always confirming like how they hold title. That's one of the first things I do.
Good work.
But like having their address, it might be nice
to have that
SOP to just get a copy of their driver's license.
Yeah.
Because the other thing we're always looking at is like, what's their address?
Yeah.
Where do they live?
And that's an example where now in the 11th hour, we're chasing things and the client can get a little absurd.
Yeah.
Right. So, probably not the best process that I have. So ideally all that information is correct at the first rip. And then we get into, the first section is really the offer deposits. Yeah. Okay. That I think is usually covered with clients.
It's like what, $50?
It's not $50. So there's in Massachusetts, there's 2 different deposits usually.
Okay.
I've done 3 before. Fun fact.
Oh.
Which we can touch on.
Yeah.
So, and just know that the standard total of these 2 deposits should be 5% of the purchase price.
And why is that?
I'll cover that in a sec. So, so if you're buying $1 million house, the first deposit is called the earnest money deposit. Often we refer to as the EMD.
Okay.
And then there's the purchase and sales deposit, the P&S deposit. So, if you're buying $1 million house, 5% of $1 million, $50,000, often written in 1,000 and 49,000. Sometimes in more aggressive offer scenarios, in multiple offers, where you're trying to stand out versus the competition, you're going to put more money on the line faster.
Yeah.
Okay. Sometimes you're going to put more than 5% on the line. We haven't been doing that as much as we used to because the market isn't in the same place as before. It's starting to get there-ish a little bit, but we know that that money's at risk. So I think as we write cleaner offers, we've we've spooled down to that 5% standard again. But, you know, 1,000, 49,000 could be 5,000, 45,000. It could be 10,000, 40,000. And that's, I think the biggest earnest money I've written is like 10 or 15K.
So what would be the strategy behind 1 versus 10?
Yeah. So great question. So often if you are writing a cleaner offer, AKA less contingencies, no home inspection, fast purchase and sales, then sometimes the first deposit, the earnest money deposit, EMD, could be higher.
Okay.
Right. So here's the deal.
What does that show?
It shows financial strength, and I'm super serious.
Okay.
Right. So that's how I read it. I don't know about you. I know we've talked a lot about deposits in our day, but think about this. You have 2 offers on a property. One's putting $1,000 down at first, and maybe the next is, let's just say, $10,000. And all terms are similar. Mm-hmm. And they're as clean as one another. So usually we're going to sign this offer, and the EMD, earnest money, needs to be collected ASAP. Mm-hmm. It should be in hand.
Time is of the essence.
Yeah, right. So an ambiguous term of whenever the other realtor feels like they can get it to you as the buyer's agent. That's why I love programs like Deposit Link.
Yeah.
Because it can be requested. It can be paid online. There's a small fee. We don't have to deal with bank checks. You don't have to wait in line, right? It's just way easier.
Shocking that not everybody uses it.
You can also do wire, but wire sometimes less secure, you know, right? Sometimes could be slower. Some banks, it's not super easy to wire with. So Deposit Link is what we use here at Reference. We request it. It's like Venmo for real estate. So there's also a platform called Earnest, which is pretty good. There's a few others out there. I think Coldwell Banker has their own proprietary one. Most bigger brokerages are doing that because that's another profit center for them. Anywho,
of course.
So if I can collect $1,000 and then you never sign the P&S, more than likely because the listing firm holds this money in escrow. To answer your question of 2 minutes ago, why is it 5%? It's usually the standard commission is 5 or 6% in the real estate industry. That is held on hand the same way it is in most brokerage businesses, boats and the like. And when the transaction closes, the realtors can get paid, and the seller gets the rest of the money. So that is, I don't know who made up the rule. That's what it's for. And so we usually take 5%. So if I have the person who gave $1,000 versus the person that gave $10,000, in reality, if that's in escrow, waiting for closing, right? And you ghost us, you never execute the P&S or whatever, the chances that I'm going to just start to make a ruck out of $1,000, a ruckus out of $1,000 is kind of slim to none. The buyer's probably not going to litigate for it because it's not worth it. The brokerage probably isn't going to litigate for it because it's not worth it. So it's kind of super, I don't want to say not enforceable because it's enforceable, but people don't squabble about it, right? Mm-hmm. $10,000, worth squabbling about, right? So I think at the end of the day,
certainly worth a couple emails.
Yeah, right. You know, so I just think that it shows, hey, not only are we ready, where we really want this property, and we're putting up this hypothetical non-refundable deposit and a non-contingent offer that you just know I'm super serious about this place, and I'm moving forward versus the ambiguous between now and P&S $1,000. There's really nothing binding us, and if you walk away like, man, what a waste of time, right? So we like to see something bigger, but for some reason it's always still $1,000, which is, so, you know, 2,000, 5,000, whatever. I like to, again, when we know there's a lot of offers, I think it's better to coach the buyer to put something a little bit bigger, but they have to know the risks too.
So what if I, say we're buying $1 million house and I'm going to put $400,000 down.
Yeah.
Do I still put 5% down with my offer, or do I put the whole $400,000 down?
Yeah. You still put the 5%.
Okay. So how does that get communicated then?
Yeah. So depending on, it can a couple different ways.
Yeah.
So the top part of the offer, purchase price, these 2 deposits, and then some offers, which almost nobody fills out, says the remainder is to be paid this way, either in mortgage or cash. And so you can just do it like a math problem, like $1,000, $49,000, another $350,000 in cash at time of delivery of deed, $600,000 from the bank for $1 million. I've literally never filled it out that way personally.
Interesting.
So later on in the offer, there's often the mortgage contingency option. That's where you can disclose the quote unquote LTV, loan to value.
Yeah.
And you could say, hey, I'm pulling a $600,000 mortgage. I'm I'm pulling 60% loan to value. That's an option in these offers that have no contingencies at all. You might want to explain that in additional provisions. Buyer is pulling mortgage on property, offer is not contingent on it. They're putting X much down. That's one option.
I like that.
Or
do you want to know why?
Tell me.
Because I can go back to the other lawyer and when they try to pull the TRID language out and say you always knew we were getting a mortgage. The only thing that this offer is not contingent upon is the mortgage commitment.
Right.
It is unbelievable that you were going to try to pull that when all along your seller knew we were getting a mortgage. Sure. You need that in there.
In fact, I just wrote an offer, about 30 days ago, and I specifically wrote in no financing contingency, but I wrote in TRID language and additional provisions for that reason, because I didn't want them to lose their deposit and the timeline was tight.
Mm-hmm.
So yeah, you could convey it there. Another easy way to do it is just provide proof of funds.
Yeah.
So you can be a little bit more ambiguous with, hey, listen, I got $1 million, I got $600,000. That's why I'm so confident in this, that we don't need this contingency. And I'm flushed with it. So it's all good. That's a nice way to do it too. Obviously the buyer has to be kosher with that. Yeah. So those are a couple different options that for you to lay out there. So that's the earnest money. I think more, if you're in a non-contingent offer, shows strength. It reads like a book. It's like it's like Neo in the Matrix. You just get to see it. This person's super serious, and they're willing to put their money where their mouth is, essentially. And then the second deposit is just the delta to that 5%. So to Brennan's question, well, why wouldn't they put more down? That's not your place to advertise your down payment, right? Because remember, all of that cash is at freaking risk if you don't perform. So it's great that you have it. Let's flash it with proof of funds. For the love of God,
this is music to my ears.
Do not say $400,000 at PNS. I mean, listen, if someone wrote that, I'd be like, dude, that's freaking awesome. This person clearly is going to close because they're never going to walk away from that. But quite frankly, an act in futility and just foolishness, because God forbid something happened. Like let's even say a title issue is probably dramatic, but in that instance that we gave earlier, let's try and figure this out.
Yeah.
Maybe if $400,000's on the line and not 49, you try and keep it and sell the freaking house again. Yeah. I don't know. So yeah, I don't love that. I did for a long period of time do 10%.
Yeah.
But that's when, literally 50, 60, 70 offers on property.
Mm-hmm.
And you truly were saying, I'm so committed. Mm-hmm. I'm putting more up front here, and I'm 100% not walking away. Mm-hmm. And sometimes that was the difference maker. Mm-hmm. I think almost always it was better to do a higher EMD than the bigger purchase and sales deposits. So I think I put a lot less weight in that at this point in my career than I did earlier in my career. But just a couple different options. 5%. If you want to be more aggressive, talk to your realtor about it, talk to your attorney about it. Make sure you truly understand the risks associated with putting more cash up front, especially if you don't have a contingency. If you get a mortgage contingency, different story. I think you can maybe be a little bit more comfortable putting more, but I don't really see the point.
It's still always risky.
Yeah, and I can tell you what, I don't think the brokerages or the escrow holder wants to freaking deal with it.
Nobody does.
Yeah, they don't want it because it's more work at the end to account for it on the settlement statement. Because now we have too much money instead of just enough or the right amount to pay commissions. Mm-hmm. We're left with excess deposit. There's more room for error. And I got to be honest with you, I think excess deposit stuff gets screwed up more than it gets right.
I agree. And especially now with what we've seen in the past couple months in the banking industry, right? Why would we want to have the liability of having huge balances in these escrow accounts? Yeah,
maybe if you're putting the $400,000 down, I'd rather it be with the brokerage than the bank. I don't know, but
the brokerage has it in their bank account.
But they have maybe more specific insurance regarding it. I don't know.
Right.
Anywho.
We don't like the risk.
No, we don't. Mm-hmm. So the top half of the offer is all about deposits and price. Kind of straightforward. As long as you understand there's 2 deposits, and sometimes that timeline can be tighter, which that's the next big part of this timeline is when are you going to sign the next purchase? So we're going to pay, in this previous example, $1 million, let's say $1,000 and $49,000 earnest money and then purchase and sales deposit. Well, when is the purchase and sales, right? So before I can answer that question, let's fast forward to other contingencies. You either have an inspection or you don't. Okay. So if you have an inspection, usually inspection windows are 7 to 10 days. Faster the better, right? Because at the end of the day, the seller wants to know you're moving forward. So when you do 2 to 3 week inspection windows, like that's just super slow.
Yeah.
And not advantageous. It's tough to get a seller behind such an ambiguous window with almost no money at stake being the $1,000. So we always here we try and write it within a week. Hey, so we're going to do one. We're going to do it in 3 or 4 days. A lot of inspection companies have online portals. You can check availability. And so we know we can get it done, right? So if we're going to write that, we always like to double check with a few different people and make sure the client's on the same page with their availability. But if the inspection is 7 days, the purchase and sales should be immediately after or concurrent to that timeline. The same day, knowing that we're not waiting till the 11th hour to do our inspection and then prolong things. We're going to try and clear it. We just have a week to do it, 10 days to do it, whatever. And then we ask for repairs. We don't. We negotiate. We don't. We move forward. We don't. And then we're executing the purchase and sales, which is the next part of what dictates that timeline, right? So if you're not doing an inspection, there's no need to drag this out a week, in my opinion. Now, here's the deal, and I know we've had other attorneys on the podcast previously, and they were like, please stop with the super fast timelines. Listen, if the market's slow, I agree. Yeah. Like, let's just do it. Let's take a week. Let's take 2 weeks. I mean,
2 weeks seems like a long time.
It's a long time. The sooner it's wrapped up, it's the better for everybody. It's better for the attorneys. It's better for the bank.
We don't forget that it's hanging out there.
Right. With the volatility of rates.
Yeah.
You know, like it's better to just get this thing under as fast as possible. So I like to move a little bit swifter. And here's the deal. If you're in a multiple offer situation, again, the seller, so if you're a buyer and you're in a multiple offer situation, the seller wants to feel comfortable knowing this is wrapped up. So sometimes if offers are due on Monday or Tuesday, I'm often doing a Friday P&S. And there's a fun fact here that I'd like to reassure all my clients because they always say, well, isn't that kind of fast? The answer is yes, it is. It's what's called aggressive, right? I think speed kills in this business.
Yeah.
And so, fun fact, the seller's obligation is to procure that document. So we're saying, dude, we're ready.
Yeah.
We can let this thing rip by Friday.
Yep.
It's on you, seller, to get your stuff together, get your attorney engaged, and turn it around fast. If they don't turn that P&S like you guys do in 48 hours or 24 hours, 10 hours, 4 hours, there's no way we're doing this Friday, and it's their fault. So we can extend anyway, right? And it would be bad faith of them to not agree. So, geez, I've been talking a lot here. I just explained, I think, a lot about that kind of process. When the P&S is, ideally within 7. If there's less contingencies, let's do it faster because it shows I'm aggressive and serious.
Yeah.
And that can be read better to the seller. And then the other thing is closing in that contract. When are we going to close? Most lenders are going to want 30 days from the P&S. So that's where you hear a normal buying time frame from offer to close being 45 days.
Yeah.
1 or 2 weeks due diligence to the P&S, 30 days to close. Of course, there's plenty of lenders or that can close in 10 to 14 days. I'm seeing most everybody being able to do it in 21 right now.
That's pretty fair. Yeah.
So yeah, that's kind of the biggest hits on the offer. And then there's...
What about the price?
Yeah, what about it?
I mean, I would assume that's a big...
It was $1 million. No, yeah.
But what was it listed at?
Yeah,
like, how did we get that, right?
Who knows, right?
Okay.
So, the price. So this is what you should do if you're a buyer. Lean on your agent to prove to you what fair market value is, okay? So
what does that mean?
Yeah, fair market value is the home's priced well, at or around what the bank should appraise it at. It's... the price is what someone's willing to pay for something, right? So I think in a competitive market, you just have to know that you can't always trust the list price, right? So I know.
Whoa.
So there's...
Mind blown. Why not?
I'll give you a couple different examples.
Yeah.
There's been times when I've put on property at an aggressive discount to fair market value, 5, 10, 15% sometimes. For whatever seller's scenario it is, I need to leave town. I need to sell fast. I'm in financial trouble. I have a sick family member. Whatever it is, we have no idea. You simply cannot just trust the price as fair market value because there's agents out there that will write list price when sometimes the thing's undervalued by 50 or 60 grand or more. A great example of this I always like to bring up is the town of Melrose.
Yeah.
The list price has been like $699 to $899 on every house in Melrose in general. This is a very wide statement for like ever.
Mm-hmm.
And things always sell at like 30% over list price. That price is made up. It's like, whose line is it anyway? They've picked a pin from a marketing standpoint, and they've told their client, this is just a marketing tactic. Sometimes that happens. Sometimes people price at fair market value. Sometimes people price high. And so the realtor has to engage and pull local comparables, aka comps, and show you, maybe through a loom, again, this is what the neighbor's house sold for. This is how this is priced. Put that on the realtor. There's plenty of online programs you can check too. The volatility of like Zillow, Redfin, all those estimates is sometimes upwards of 50%. You can't rely on those options to price a home.
So we shouldn't be stuck as consumers on the market, the list price, right? Like it's not like when you go into the supermarket and it costs $4.99 and you're not going to be able to go to the counter and say, I want to pay $3.99.
Yeah, it's not that simple of a transaction, right? Where the price is the price and you just pay cash and you check out. It's the price. It's the price could be a high price, it could be a market price, or it could be a low price. And I think it's the realtor's job to validate that and then give the proper guidance to the hypothetical buyer to make an informed decision, you know?
So you're advising people more than anything. You're not an order taker. You're an advisor.
Yeah, no, I think the agents who get things under contract for their buyers with speed can prove through data the right answer and convince their client with conviction that it's the right or wrong thing to do, you know? And I think that's probably a hard skill to learn. But yeah, the price ain't always the price. And so I think
which is a really hard concept to grasp as a consumer.
Yes, because I'm sure you've heard it. I'm not paying X much over asking.
Yeah.
Well, X much over asking doesn't matter if the price was $999 and it should be $1.1 million. Right. Like we literally just had a client who offered on a property just outside of Boston where the list price was $1 million. Well, if you just pulled any comp in the area, like the closest comp was like $1,075,000. So that's a marketing ploy to get under $1 million mark to draw in buyers. And then anybody who did the research
is going to know that
was
thing
like, dude, the neighbor's house just sold for it's worse than this one. Sure, the market was a little bit different. Let's check the stats. Oh wait, the market's up 8%. Dude, this is going to sell for $150. Guess what? We try and write a competitive offer. We don't get it. It goes for $150, right? Like that's a great example of how fast the market's moving. And I think the savvy agent markets appropriately with price and other marketing strategies. So listen, we could talk about pricing forever. Lean on your agent to prove it to you. What was if you were listing this house, Brendan, what would you have listed it for? And I think that's a great question because you can back into maybe what the list price is versus what the offer price may be.
All right. So now that we've talked a lot about the offer and how to write it, so we're on first offer, right?
Yeah. The first offer.
The first offer. Now
sometimes starts a little bit slower than wave everything. Go $200,000.
Now let's go to we're on the sixth time we're trying this. How's the conversation different in time 6 versus how it was in time 1?
Yeah. Selfish ploy here. I don't get to 6 many times. I think
I can imagine that you don't.
No, 3 or 4. I think if the client is paying attention, they're following direction, right? And I think it's really important not to not answer your question is like to get feedback on your offer, right? So like it's been really hard in this business the last couple of years with not getting your offer accepted, right? So relationships in this business go a long way, and if you don't get feedback on your offer, your client sometimes is going to the buyer is going to keep doing the same things and expecting a different result. And that's
the definition of insanity.
Correct, right? So I think getting that feedback or sometimes maybe explaining what escalation clauses are, which we haven't even talked about yet.
Nope.
Can sometimes get you a redacted offer and you can show your client what this looks like. And then they can choose to beat it. So getting the feedback is helpful because then you can coach, right? So let's give a scenario where the home is listed. We just had a client who home was listed at like 450. I think we went in at like 530, didn't get it.
Mm-hmm.
Okay, with good financing, a good money down, but had a home inspection.
Mm-hmm.
Well, like if you find the next house and you really don't want to lose it, maybe price wasn't at all, right?
Yeah.
So as long as we know that the house was priced well, we can find that out. And you're not going to go at list price because you just tried 80 over and it didn't work.
Hold on, you said something super important.
Yeah.
You said price wasn't everything.
Price was not everything. Terms, the contingencies were important, right?
So it's kind of like the mortgage conversation we just had,
Yeah,
where rate or price
not everything
isn't everything.
Yeah, I think that's a tough concept for people to understand. Like I always hear when we're onboarding clients, I'll never waive my home inspection. Which, listen, I want you to get a home inspection. It's just really tough right now to get your offer accepted with a home inspection.
Because everybody else is waiving it.
And I tell this very specific phrase, listen, it's not about what you want, unfortunately, although it sounds like it should be. It's not about what you want, Brendan, in this buying experience or what you want to do. It's the other 6 people behind you that have had their teeth kicked in for 4 months. They're ready to do something different. They're ready to remove their contingency, which puts us a few rungs down on the ladder. And unfortunately, we're not going to get something accepted with that in this competitive price point or whatever it is. And I know this is just a moment in time.
Mm-hmm.
And there'll probably be a lot of lack on that too. Listen, we all want you to get the home inspection. Sometimes your offer, it's hard to get accepted with it. So I feel like this podcast could be like 7 hours long. Like you could do what's called a pre-inspection, meaning you do it before your offer.
Mm-hmm.
You do it before, you can do it, but your offer isn't contingent on doing it. And so the seller knows, wow, this person put $500, $600, $700 up front and still wrote an offer on my house. That's kind of attractive. Like, and they know what it's like. That's a great option. You could do it at some point during the transaction, but again, not make your offer contingent on it. Maybe you do it after the P&S.
Mm-hmm.
And if you walk away, then I guess you lose your deposit. No one's going to do that,
right?
So, or you can just do it once you own the house. This thing's been around for 100 years. There's going to be old stuff in it, right?
Yeah.
So, but yeah, it's not always price. And so, 3rd, 4th, 6th time to your question, I think if you're getting feedback and if you're taking these quick timeouts, like, hey, let's debrief. What was the reasons we didn't get this offer accepted? And you're good at getting that to your client, then more than likely you can start to improve. I also think it's nice too. Unfortunately, sometimes the buying experience takes longer than 30 to 60 days. Like, it's nice to go look back and see, be like, hey, do you remember 123 Main Street that we offered 530 on? Did you see it close at 615? We weren't even in the freaking wheelhouse, man. Right. So like once they start to see those close, I think people start to come around too. And it's a matter of time there before their offer's accepted.
But like all of the process, having the right people around you, learning, listening to the advice and guidance you're getting from people, and taking it in and processing it in a way that you're comfortable acting on the information.
Yeah. Did you ever watch Better Call Saul?
No, but my brother and father do, and they talk about it all the time.
So it's funny. Like I watched it for a while when it first came out, and I'm just like catching up on one of the last seasons right now. And I watched it for like 40 minutes last night after the kids were in bed. And there was this scene where this like super rich dude was not taking his attorney's advice.
Mm-hmm.
And he like had a huddle with them and was just giving them giving the girl and, her boss, whatever, the main characters in the show, like a ton of shit. And they left the meeting and the two attorneys like were like, so what? We're just going to find out if we get fired tomorrow? And she was like, no, screw this. Like, we're going to lay down the law. They walked back in the room and they're like, hey, listen, at every turn I gave you advice. I told you don't do this. You did it anyway. I told you don't do this. You did it anyway. I told you to not listen to that. You stayed in the room and listened anyway. I told you to not engage with them. You engaged, right? She's like, if I'm going to be your attorney, you need to listen because I gave you the right counsel and you didn't listen. So it's kind of funny. Like, that's obviously a really harsh message. Yeah. It's just a TV show, but I think it's frustrating when like I'm not just saying this shit because like I want you to waive your financing contingency. It's just what wins right now, right? And at every moment, if you get a great agent and a great team, they see the lender sees the accepted offers.
Mm-hmm.
The agent sees the accepted offers, right? When you have a listing, and this is great too when you have clients that are buying and selling. Like I had a client recently who was writing offers, not winning. And I'm like, dude, wait till we put your house on the market. You see what happens. 14 offers, 2 of them had home inspections. Like, this is what wins, man. Do you get it yet? And so I think that was kind of like a cool scene. Like, listen, I'm giving you guidance because this is what will win. It's your job as a consumer to listen or not, I guess, right? And I know that sounds like a really harsh message, but I ain't doing it for fun.
Right.
You know?
Well, and it comes back to sort of the genesis of the first of these series, like the things you need to talk to an agent about before you start working with them.
Yeah.
The processes, the going through, the finding out what's important. All of this leads to, hiring a professional that is really good at what they do, who takes the time to be the best of their craft, invest in learning, invest in technology, invest in all the things that are going to make them competitive and be the best agent for you. But then you have to listen to them. And
fair.
For most people, that's probably real hard.
And listen,
I know it's hard for me when I'm in this and, trying to trust somebody else and I've hired them.
I think it's tough at first, and we can try it the way you want. It's fine. And I'm going to tell you, hey, I've literally told clients, hey, we can do that.
Yeah.
I don't think we're going to win.
Yeah.
I want to be clear with you. And I've had some clients be like, why are you so adamant that that's not going to work? Because I'm looking at the market.
Right.
It's like, this is my job. I see it. I don't think it's going to win. I'm not trying to be negative about your offer. I'm just trying to let you down early. Like, we're going to get smoked. And then you get smoked and you get a little bit of credibility from that.
Mm-hmm.
And I think the faster you get the speed to trust or speed to credibility by not writing 6 to 15 offers because you're actually giving the client real intel on what worked or what didn't, I think the faster that client gets their home, which, by the way, in this market, saves you freaking money.
Yeah.
So, between rates and the market, sheesh, you'd save a lot of money if you got in contract in February right now.
A lot. So as a buyer,
we're running up at hour 10, by the way.
Yeah. And I think this will be sort of the last piece, and I think we can end it on this. What's a safe amount or an average amount of offers to get rejected before you get to an accepted?
Jeez.
In this market.
If this is like a Family Feud answer.
No, it's not. I'm just generally.
We surveyed 100 people.
No, just gut feeling. Like, if I'm new to this, how many times should I get used to getting rejected? It's like dating. Like, I need to know, Listen, how many times I have to have the door slammed in my face.
I have clients who don't heed the advice.
Yeah.
And they're in the double digits.
Okay.
I have clients that at every offer improve and learn faster. And I would say that number is under 5 offers.
Okay.
And I really think from consultation, like initial onboarding to closing, really could be 90 days.
Okay.
It's a little bit of due diligence, a couple weeks to find the team. You hired the team, we're engaged, right? And you're pre-approved. That's fast. It takes a day, not even, right? And let's get out and go shopping. Let's figure that out now that we've hired the team and we get all this other stuff is prep work, right? So if you're thinking about buying in the fall and you want to be in your house October 1st, you should get on it in July because you might have something on your credit you don't know about. That's next freaking month, people, right? So, you got to get that stuff tight and then you're ready to shop. And then it should take us, I don't know, a month maybe to find the house. If you're the one who wants to look every weekend at 40 homes and never pull the trigger, different problem. But if you see something and it checks the boxes of everything that you said, it's got 3 beds, it's got 2 baths, it's got a yard, it's got a garage, it's in this town, it's got a nice, what are we waiting for? Guys, this is and that's on the realtor. I think some realtors will show forever. It's your job as the agent to be like, this is it. How long could you see yourself living here? They say, I don't know, 5 to 10 years. They should buy the house. Yeah. They say we can't see ourselves living here, pass. Yeah. Right. So that's part of the problem, and I think some people can't navigate that. But if you're ready to write and you're improving and you're well qualified, you should be able to go right off the rip. If you're a first time home buyer, you're putting 3% down and you don't want to waive your contingencies, you might be in it for a minute. You know, I think that's the segment of the market that's tough right now. Especially as affordability has crunched as prices have gone up and rates have gone up. So that might be a different story, to be clear.
But I think it's helpful as a listening or as a listener who is trying to embark on this journey of home ownership, to understand that like it's not always the first time, but it doesn't take 20 times if you listen to your agent and follow advice.
Agreed.
All right, good to know.
And the last thing I'll say about it is, I think you like you said, you gotta listen to your agent, and I think you can't be afraid to write the offer, right? Because I've had plenty of clients that I've shown one home to, and they're like, I really like this, and they're like, but maybe I should see 4 or 5 more homes. I'm like, dude, and sometimes it's one and done, and we write it and we get it, and that's great. And they're super happy clients. They're all still in those homes today. And then I have the client who is like, this could do, but I haven't seen enough, right? And then we go show them 50 freaking homes,
and they still want the first one.
Yeah. Right. So just
now it's gone.
Just know if it. So just know if it works. Like, don't be gun shy. Pull the trigger, and I try and write that offer. There's no guarantee you're going to get it. Right. It's called an offer. It's not called a contract yet. So
right.
Anyway, so we unpacked a ton about the offer process, getting your offer. We talked a ton about contingencies and the timeline. I feel like we could talk about this for another hour.
Well, we will in our next episode when we go from writing the offer to what happens after the offer gets accepted.
You're in contract, and I'm sure we'll kind of retouch on some of the contingency stuff as well at the tail end. So, anything else before we close it out?
No, other than just, every time we do this, I walk away learning so much more than I knew when I sat down. So thanks for the knowledge, man.
Listen, it's just simply my pleasure. We will catch you all on the next time of The Word.